Institutional order flow. In a bullish order flow, the market is rejecting below lows and breaking above highs. In a bearish institutional order flow, market is rejecting above highs and breaking low lows. In today's video, we're talking about institutional order flow, which is basically the advanced order flow. There is other type of order flow where break of structure to the upside from the previous candle's high or candle's low. Break structure above it is old bullish order flow. Break structure below it is a bearish order flow. Yes, that does not work in a institutional order flow. Is completely false, but that helps to get the basics right. But that's why there's a institutional order flow, and that's why that's a basic, right? There's an advanced order flow. There's a basic one. And today we're talking about the institutional order flow. We're going to talk about how does the market change its structure shift. How do you know the market structure shift is changed? How do you know the order flow is bearish? How do you know the order flow is bullish? What time frame should you look for the institutional order flow for day trading, intraday trading or day trading, right? For a swing trader, if you're a swing trader, your institutional order flow will be on a daily time frame, not the 4 hour, that daily. For an intraday trader, your order flow would be on the 4 hour time frame, not the daily, okay? Not the hourly as well. So because you guys look at the hourly, that's why you guys get manipulated and you guys lose. And let's get straight into it. Order flow. Okay. So I've just told you guys what time to use it on. And one other thing I want to talk about is when or which time frame should you look for the higher time frame key level. So for the order flow to change. So if you want the market, is the market gonna go to a the market, so a change, right? So breakout structure, so MSS, right? Market structure shift to a bearish side or bullish side, right? And you guys wonder what time frame key level should I be looking at? Because people say look at the higher time frame key level. Am I looking at the daily? Am I looking at the 4 hour? Am I looking at the weekly? Right? And the time frame for your higher time frame key level for the order flow change, right? When the order flow changes from a bullish order flow to bearish order flow, you're looking at the weekly. Since you look for the 4 hour time frame as your order flow, you look at the weekly as your higher time frame key level to change the order flow. So for a swing trader, your order flow would change once the market taps the monthly key level. And let's get straight into it. What do I mean, right? You guys know when the market's in a bullish order flow, market will constantly reject below lows, break above highs. When it's bearish, reject above highs, break below the lows. Let's get straight into it. Till this point, the market order flow is bearish. So people who took along on this breakout structure without knowing that there's additional order flow, they would have faced major losses. Why? Market broke structure up, you think is a higher prices, right? Market rejects above the high and comes back down, breaks below the low. What is the order flow in this case? Bearish. The order flow is bearish until the market taps this, and the last up closing bullish candle that tapped this higher time frame key level is your market structure shift. So there's a last bullish candle that tapped this higher time frame key level. So once the market closes above this high, the order flow has changed now to a bullish order flow. Until then, the order flow is bearish. Not when the market broke above this and goes up, right? That order flow is still bearish until the market closes above this. You can see right over here, broke below the low, broke below the low, broke below the low, rejected lower time for total soup, broke below the low. Order flow is still bearish, right? You can see broke below the lows, right? And a bearish order flow. Now, the market is still in a bearish order flow until the market closes above this. So right when it's 5 a.m. candle close above, the order flow is bullish now. Market, you see, broke below the low, rejected above the high, rejected above the high. So rejection, break. You broke below the low, rejected above the high. Eventually, there was no liquidity here. Market went up, Now when the market broke structure up above this last high that tapped this higher time frame key level, which is the weekly ERL, now the order flows back to bullish. Now order flow is bullish, market comes down, and you see he struggled a little bit, but he rejected below the low. He went up a little bit. You come back down here, rejection below the low. Yes, he did close below it. That's not a break. He still reacted out of it. You can see it's still reaction out of it. Bro, rejected below the low. Broke above the high. Broke above the high right over here. Broke above the high again. Now it tapped another high at different key level, which is the weekly fair value gap. Now this is the last down closing candle prior to tapping this higher different key level. So right when it closed below, now the order flow is bearish. Just above the highs, broke below the low. Right over here, broke below the low. And you can see right over here, this right over here, this market when it closed above it, it's still rejection. Market still reacted out of it because the order flow has now turned bearish. Low time frame total soup, broke below the low, broke below the low. Right? Very simple. That time it not broke it, but you can see broke below the lows, broke below these lows. It's not always going to be perfect, by the way. When the market sometimes, like in this case, you can see it now broke above the high. It just came back down, right? Eventually, started doing the same thing again. Broke below the low, but broke above the rejected below the low, broke above the high, right? You can see right over here, broke below the low. In this case, the order flow is still bearish. She has not tapped the higher time key level yet. Market goes up, goes up, goes up. Right over here, rejected above the highs, broke below all of these lows. All of these lows got broken through, right? These lows got broken through. The order flow is still bearish until the market taps this high. This is the last high that tapped this higher time key level, which was this. There's a monthly fair value gap over here, right? This was the last high that tapped it, right? So right when the market goes above this high, the order flow is bullish. You see, market broke structure above it, get back down, rejected below the low, rejected below that other low, broke above all of these highs. Every single high here got broken through. Broke above, low time from total soup, right? Broke above the highs. Right now, there's a last low that tapped this hard to key level, which is the weekly fair value gap and weekly high, right? This is the last down closing candle that prior to tapping this higher time key level, closed below, reject above the high. People who would think, people, this is where you guys get confused here, right? Close above this previous candle's high, or it's order flow. Because when the market still went down, because you don't know about the institutional order flow. This is the real order flow. This is how you do the real order flow without, going out of the basic market structure shift, which is false. You should still learn about it, but I won't teach you guys about it because I don't want you guys to go best out of that and you guys get lose. Come to me, complain. That's why I teach you guys the advanced only. Broke below the low. This right over here is the last up closing candle that tapped this higher time frame key level, which is all the way down here. So once it goes above this, the order flow is bullish. Now the order flow is bullish. Market came back down, went back up, broke above the high. Now over here, you can see right when it broke above the high, it tapped the weekly key level, which was so let me see what weekly key level did it tap here. It tapped this weekly key level. This is this line right here. It tapped this weekly key level. So the order flow is relatively still bullish until the market closed below this low. Right when it closed below this low, you can see, right when it still struggled to go up a little, it still struggled to go down, right? Right when it closed below it, reject above this high, reject above these highs as well. As you can see, there's a low time from total soup. Broke below all of these lows. Simple as this, right? It's not difficult. Now this low is the other high time key level, which is the weekly ERL. Eventually, this is the last bullish candle to tap this high time key level. So now close above it. Now we're in a bullish order flow. You can see this reaction up below this low. Yes, it closed below it, but guess what? It still broke above the highs. You can see broke above the highs, right? Just below the low, broke above these highs, broke above all of these highs, right? It's simple, right? This will as well be in my ATU free mastermind CRT bootcamp. I will teach you guys. I'll put this on there as well, so people have been complaining about it, not having enough, examples in the ATU free mastermind CRT bootcamp on chapter 9, the advanced order flow. A lot of you guys been requesting to show me more examples, so that's why I'm showing you here, right? So now the order flow is bullish, reject below this low, broke above all these highs, right? And you can see it went down. It did not close below this low, by the way. You can see it did not close below. This is the last low. This is the last, I'm pretty sure. Nope. Yeah, this is the last low that tapped this hard to key level. Why do we not count this? Because this candle went beyond this candle, right? So this is the last low that tapped this hard to key level. So now the order flow is still not bearish, still rejected below because it's not closed below it, right? So the order flow is still relatively bullish. Go above, broke above the high, rejected below the low, broke above the high, right over here, close above. This was the last low that tapped its high to key level, which is the weekly order block. We're still in this weekly order block, which is this candle, this big ass candle right over here, big ass line, right? That's dragging all the way down here to here. Now this is the last bearish candle that tapped this. Actually, yeah, nope. This right over here is the last bearish candle that went above this other highs, right, which were on a weekly key level. So now the order flow has turned to bearish order flow. The order flow is bearish until the market taps this other weekly high to key level, which we're already in right now. So once the market closes above this, let me go drag this real quick apart. Once the market closes above this last high that tapped this high to key level, which is the weekly IVG, once it closes above this high, the order flow now is bullish. But the order flow at that moment strictly is bearish. Why the order flow is bearish? There's a last low that went beyond this previous candle that tapped the high to key level, which is the weekly order block. So there's a last low, and this is the unit secret, the highest high. So the order flow is bearish. This is a institutional order flow. When the market is in a bearish order flow, market breaks below the lows. When the market is above in a bullish order flow, market breaks above the highs, but rejects below the lows. If it's in a bearish order flow, market rejects above the highs and breaks below the lows. I love you guys have been requesting this about the more examples on the ATU free Mastermind CRT bootcamp. This will be in the ATU free Mastermind CRT bootcamp playlist as well. So just so the people who are confused, I'll put this on there as well to teach you guys more about the advanced order flow. Thank you for watching. Like, comment, subscribe, share. Actually, you guys, I see you inside my Discord. Link in the description. I see you guys out there. Make sure you join. I want to see you there. I want to see you improve. Peace out.